Good afternoon. My name is Isaac Sosa, and I am an agent here in the Research Triangle Park in North Carolina. I'm making this video because I've been getting a lot of questions with my clients. Questions on how do you get a mortgage when your credit is bad. Over the week, last week, I've spoken to at least 5 clients of mine asking me how do you get a mortgage when your credit is bad. So the answer to that question, most lenders currently after COVID, after COVID became stricter under lending, and they increased the credit score requirements, and now some lenders require at least a 620, where before pre-COVID it was 580, and that was with an FHA loan, a government loan backed by the government. But they've increased it to 620 after COVID, and some lenders went as high as to increase the credit score requirement as high as 640. There is only one lender that I know of, and I've done a lot of research for my clients in the past. I've been in real estate since 2008, so I've researched a lot of lenders, and there's one lender in particular that there's no credit score requirement. So you can have essentially a 500 credit score, a 480 credit score, and they really do not look at the credit score. What they look for is payment history. They want to make sure that in the last 12 months you've made your payments on time, and then for collections, any collections, outstanding collections with an outstanding balance, they're looking back at the last 2 years, the last 24 months, and any collections that are within the last 2 years. If you have any collections on your credit, this lender will require you to make payment in full or to settle with that collection agency. And as long as you can provide proof of either paying in full or paying an amount less than what is owed, and then getting a letter from that collection agency stating that the debt has been settled or paid in full. So the name of this lender, it's NACA, the Neighborhood Assistance Corporation of America. And NACA has been around since the late 1980s. And they've been an advocate for the community all around the United States, making changes and being at the forefront of these big lenders that were taking advantage of low to moderate income individuals, taking advantage of a lot of Americans and getting them into mortgages that they couldn't afford. Back in the before 2007, 2008, where the market tanked there for a few years, there was a lot of lenders that were taking advantage of a lot of borrowers, and a lot of them ended up losing their homes. So NACA is different. When they're looking at somebody that is applying, they want to make sure that that person is getting into a mortgage payment that is affordable to them and a mortgage payment that they can make. So affordability is very key with NACA. They want to make sure that you are that you can handle your finances, for one, and want to make sure that your payment history is on point in the last 12 months on anything that is reporting on your credit that is active and open on your credit, such as student loans, also personal loans, car loans, credit card. Want to make sure that those things have been paid on time in the last 12 months. And then collections, they have to be settled or they have to be paid in full if it's within the last 2 years, if it occurred in the last 2 years. Any collections outside of the last 2 years don't require payment. NACA is not going to require you to pay it. Simply, they're going to require you to just write a letter of explanation explaining why you got into that collection, what you did to try to resolve that account, and why is it not likely to occur in the future. So it's NACA is a nonprofit organization that is fighting these big lenders that are decimating communities around the United States, and they've been, if you will, they've been a protector of the low to moderate income individuals, and getting them not just into a mortgage, but an affordable mortgage. As you know, today's system, the way that has been built, it is built around credit score requirement. The lower the credit score they have, the higher the interest rate that they're going to give you. With NACA, everyone essentially gets the same interest rate. It is a below market interest rate. The interest rate as of Friday, last time I checked their website, that interest rate was at 2.125%. And that is a fixed interest rate for 30 years. And it's an amazing interest rate to begin with. And it doesn't matter if you have a 480 credit score, if you have a 700 credit score, you're going to get the same rate as long as you meet the NACA criteria. So let me just go over a little bit quickly at what the NACA criteria is and what is required for you to be able to get qualified through NACA. So one, when you come to the NACA program, they're going to check your credit. And when they check the credit, they're going to be making sure that you don't own any other property. Make sure that you don't have any ownership interest on another property. They want to make sure that the home that you're going to purchase with NACA is going to be your primary residence. And the reason it has to be your primary residence is because NACA has an agreement with Bank of America, which is the lender that funds the loan. They have an agreement that states that the buyer or the borrower has to occupy the property as a primary residence, and they have to live in that house for at least 3 years, or at least 3 years. And it is not required that you live in the property for at least 3 years, but if you want to purchase a property with NACA again in the future, you will only be able to do so after the 3 years are up. If you, let's say a year later, life changes, which happens often, and you need to sell your house, you can sell your house. You just can't purchase through the NACA program again until the 3 years are up from your last closing date. So this program is great for anybody that has a bad credit score, and maybe over the last year you've been trying to fix your credit situation. You've been trying to pay off your collections or settle your collections. This program is great for those type of folks because it allows you to get into an affordable mortgage with an extremely low rate. As you know, 2.125% is very low. It is a lot lower than any FHA loan that you might get. And then you have not only the credit score requirement of meeting of at least 620 or 640 with some lenders, you also need to put down 3.5% with an FHA loan. With NACA, you don't have to put any money, zero. That's all you have to put down with NACA. You don't have to put any down payment. There is no closing costs. Bank of America essentially pays the closing costs for every one of NACA's members. So if you're a borrower with NACA, the lender will pay the closing costs on your behalf at closing. And then the other great thing about NACA is that there is no private mortgage insurance. For those of you that don't know what private mortgage insurance is an insurance that the lender puts on top of the principal, interest, your taxes, and insurance in order to protect them. Private mortgage insurance only protects the lender. In the event that you default on the loan, then the lender will be paid whatever you owe them. So this insurance will secure that loan that they've given on the asset, and then on top of that, they've already got the property. They can foreclose on you. With NACA, there is no private mortgage insurance. So what does that mean? It means that you can afford a higher priced home because you're not qualifying. You have one less payment attached to that mortgage, which means that you can qualify for more. On top of the interest rate being lower, you can qualify for more because interest rate is lower, and you're not having to qualify with that extra payment, that private mortgage insurance that other lenders have if you're putting down less than 20%. So great things, right? So NACA has no credit score requirement. You don't have to put anything down. There's 0% down that you have to put down. There's no down payment requirement. The closing costs are paid on your behalf, and there's no private mortgage insurance. So what is the catch with NACA? So since NACA is an advocacy, very centered around advocacy, the only catch with NACA is your participation. By this, I mean that when you come to the NACA program, they're gonna require you to sign a participation agreement that states that because of the advocacy and the participation of the members prior to you, and NACA got to the way that it is now because of that participation that those individuals did. And they want to continue that same cycle of participation and advocacy with NACA. So participations, you can do anything like help around the NACA office. Well, now with COVID, things have changed. The participation is not as required now because their offices are closed. All around the United States, their offices are closed, so you really can't participate in a way that you used to be able to participate before COVID. So participation is really not that important now. But you have to be able to participate all the way through until you have that NACA mortgage, until you pay it off, or until you refinance on with another lender. I don't know why you would want to refinance with another lender because NACA, the rate is going to be great. You don't have to pay any private mortgage insurance. So there wouldn't be any sense of refinancing. So it's great things with NACA, very great things. Going through the NACA program. I used to personally work for NACA years back. I used to be a mortgage consultant with them, so I really understand the whole NACA mortgage process and what it takes to get qualified through NACA. And the only catch really is that participation, and then doesn't matter what your credit score is, doesn't matter if you don't have the money for that down payment, you'll be able to go through the NACA program. And the great thing about the NACA program is that they're a HUD certified counseling agency, which means that, in fact, they're the largest HUD certified counseling agency. If somebody needs help with budgeting and needs help being able to get a roadmap to homeownership, NACA is the lender to do it. So maybe if you're not ready now, maybe you don't have income right now, or maybe you're you've have a gap greater than 30 days in the last 2 years of employment. Maybe you have a lot of collections that you've gotten in the last 2 years. The great thing about the NACA program is that they will tell you what you need to do in order to get qualified through NACA. And it's not like with another lender where they pull your credit, they identify that your credit is not up to par with what they need. They'll just turn you down. They'll deny your loan. With NACA, there's no denying anything. What they're going to do is that they're going to give you what's called a task list. They're going to give you a roadmap to home ownership. They're going to tell you, okay, these are the things that you need to do in order for you to get qualified. And it's very simple. I mean, they'll spell out everything that you need to do. They'll put the accounts, the collection accounts, late payments that you've had. They'll give you a list of all those things that would allow you to focus on those things. And then you can come later on to the program once you've done all of those or checked each of those items on that checklist, and then you will definitely be able to get qualified after you do that. So even though there's no down payment, NACA does require you to have certain money set aside. So they want to make sure that you have, which they call the minimum required funds. They want to make sure that you have some money set aside because they know that you're going to have to use that money to be able to get on the contract. So once you're qualified and you go house searching and you find a property that you like, they know that you're gonna have to submit an offer, and then with that offer there's going to be some type of earnest money deposit attached to that offer. Here in North Carolina there's also a due diligence fee. In some states there's an option fee, and that's the reason why they're required to have certain money saved. Also for prepaid items at closing, like 1 year of homeowners insurance, 3 months of homeowners insurance, 3 months of real estate taxes. These are prepaid items that are put into an escrow account that the lender puts in an escrow account on your behalf, and then every year, as you start making your mortgage payments, anything that is the portion for the taxes and the portion for the insurance is going to go through to that escrow account, and at the end of the year your taxes, the lender will pay off your taxes and the lender will pay off your homeowner's insurance. So those are the reasons. That is the reason why NACA requires you to have that minimum required funds, and this minimum required funds varies. It depends on the price point, but the range is anywhere between $3,500 to $4,500. This is what they're going to require you to have saved in order for you to get qualified through NACA. And then the other thing is, the NACA is looking for, when they pull your credit, they're going to be looking for making sure that you don't have any judgments, making sure that you don't have any tax debt that you owe the IRS, and making sure that you don't have any liens in your name. If there's any liens, it doesn't matter the age. You have to contact the creditor, try to negotiate with them, get that paid, negotiated, and then once you have the proof that you've paid it, then you would contact the county where that judgment or lien is being it was registered in, and then they would release that judgment or lien. So as long as you have these things, you could get qualified with the NACA program. I've helped hundreds of buyers throughout my career through the NACA program. I've seen where clients had a 500 credit score, but they had a good payment history of at least 12 months. And they didn't have any collections within the last 2 years, and they were able to get qualified with the NACA program. Now, one thing about the NACA program, it takes a little bit longer to close on a NACA deal. And the reason it takes a little bit long to close on a NACA deal is because NACA is a mortgage broker, right? So NACA has to go through the lender, Bank of America, and then just because they are sort of kind of like a broker. And even though they have their own mortgage, the NACA mortgage, things just get uh, sometimes it just takes a little bit longer because NACA is the middleman, and then they're gathering the information from you, the borrower, and then they're sending it off to Bank of America, and it takes a little bit longer, especially when you're on the contract. It takes a little bit longer, that communication between NACA and then they send the information to Bank of America, and then Bank of America will send either conditions back or a full approval, and sometimes that process takes a little bit longer. But on average, on all the deals that I've closed with NACA, on average it takes about 45 days on average. I've closed deals with NACA in 30 days. It doesn't happen often, but it can happen, and I've closed deals with NACA that I've taken on average 45 days. And then another thing with NACA is the hand department. Hand department is the home development, neighborhood development department within NACA. Their sole job is to identify and to go over the inspection report right after you get on the contract and you do your inspections. They are going to identify issues with the property. And sometimes, if you don't know how the NACA process works with the hand department, it's very important that you use an agent that understands the NACA process and has closed NACA deals in the past, because if you don't, you're only hurting yourself. And the reason for that is because there's different timelines. There's a timeline, and if that agent is not following everything that they need to do within the timeline, then what's going to happen is that you're not going to be able to close on time because you've missed those certain things that you have to do within a certain period of time. And if you miss them, then you're not going to be able to close on time. And that's why you need to use somebody that is knowledgeable with the NACA program, that have closed NACA deals before, that understands how the NACA program works as a whole, and also knows how to overcome hurdles with the hand department, because that is the department where a lot of the holdups happen, the hand department, when it comes to repairs, repair negotiations, and how to address those repairs. You need to know, your agent needs to know, and they need to educate you, and they need to help you with what you need to do. So as long as you use an agent that has done a NACA deal before, you will not have any problems, because if an agent is on point, they know exactly what they need to do in order to get the deal from contract to close. So that is this video that I wanted to make today on Thanksgiving. I know there's a lot of you that want a home and want to provide that home for your family, which, I've spoken to a lot of buyers throughout my careers that they've been turned down. They've been turned down by these big banks because of their credit score, because their credit score wasn't up to par with what they wanted in order to give that loan approval. And with NACA, it takes a little bit longer, but it doesn't matter what your credit score is. It doesn't matter if you have a 400 credit score, as long as you meet the NACA criteria, 12 months of on-time payments, any collections that are within the last 24 months, they're going to require you to address it, meaning paid in full, or negotiate with that collection agency to pay less than the amount owed. And then, again, a recap of what the great thing about the NACA program: there's no closing costs, there's no down payment, there's no fees on points that they charge to originate the mortgage, and you are not having to pay private mortgage insurance that benefits the lender in the event that you default. NACA doesn't believe in private mortgage insurance. In fact, if you ever get in a bind, you lose a job, or like I've had clients that have gotten cancer, and they've lost their job. NACA does not foreclose on you. That is the beauty about the NACA program. Because they're a home ownership program, they're not going to foreclose on you get if you get sick and you lose your job, as long as it is a valid point or a valid reason why you are in the situation that you are and you stop making your payments, they are not going to foreclose on you. And I've had clients before in the past to where they got into a situation and they lost their jobs and then they couldn't make the mortgage payment. NACA did not foreclose on them, and that is a peace of mind, especially for the hardworking, low to moderate income individuals. It's it's always been my passion to help these type of folks. And then I want to make sure that you get the information that you need. So if you're interested in the NACA program, if you're interested to learn more about the NACA program, just go to the description. There I'm going to put my email address. If you have any questions, feel free to reach out to me. We can also we can do a Zoom meeting to where I can tell you a little bit more about NACA if you'd like. But I just wanted to do this video because I know there's a lot of people now in Thanksgiving that wish that they were in their own home, and I want to make sure I want to make that a reality for some of you. It doesn't matter where you are in the United States. It doesn't matter. NACA, you can get a NACA mortgage anywhere you are in the U.S. Anywhere, because now they're doing everything virtual. They're doing the workshop. You have to do the first step is doing a webinar, a workshop. It's about 2 to 3 hours. They explain to you what the NACA program is. They'll explain the whole criteria, what you need to get qualified. They'll explain to you the debt ratios, the housing ratio. They'll go over with you the payment history requirements. They'll go over with you the NACA overview, where NACA came from, and it is a ton of information that you can get there at that webinar. And maybe you are watching and you don't have a bad credit score. You've been making your payments on time. You don't have any collections. This program is for everyone. It doesn't matter what your income is. It doesn't matter what your income is. There is no income limits. There's no income minimums. As long as you are, they're going to check your credit for the payment history. They're going to check your monthly liabilities, and then based on your income and your monthly liabilities, they're going to tell you what is the maximum mortgage payment that you can afford, and this is called debt to income ratio. They're going to compare your debts based on your monthly gross income, and based on that, they'll analyze and let you know, okay, this is the maximum mortgage payment that you can afford based on your debts and your income, and also they're going to require you to do a budget. NACA wants to make sure, like I said, NACA is very keen on affordability, and they want to make sure that you can afford the mortgage payment. And then also it's good for you because you're able to identify where your money is going. I learned very quickly that you have to tell your money where to go, because if you don't tell your money where to go, you're gonna lose grip of your money, and it's gonna go places. So you have to have a structure with your money, and NACA wants to make sure that you are put a system in place with your with everything, your housing expenses, your entertainment expenses, and want to make sure that you know exactly what you spend, so that if you need to restructure the way that you do things, so that you can maybe save the minimum required funds. Maybe you don't have the minimum required funds. They'll tell you what you need to do in order for you to get into that savings of being able to save as well. So if you like this video, please like my video, share my video. I know that you might have somebody, you know, a friend, maybe a family member, that maybe they don't have a great credit score, maybe they've been turned down by another lender, and you share this video with them, they can go, you guys can go to the NACA website, NACA.com. Again, the number, the website is NACA.com, and I'll also put the link to the website where you can register to that webinar here in the description. And then I hope you have a blessed day. I hope you have a blessed day with your family and Thanksgiving. Hopefully this video will help you in seeing that homeownership is definitely achievable, despite of what your credit score is, as long as you make changes. Maybe you're not ready yet, but you know, as long as you make the changes that I discussed in this video and you do the things that I discussed in this video, you'll be able to get qualified with the NACA program. Hope you have a blessed day, and thank you again for watching. And do please share my video and like my video and subscribe to my channel for more content in the future.